Okay, so let's begin. Let's begin the last session for consolidation of subsidiaries. It is AS21. AS21 is for subsidiaries, AS23 is for associates, AS27 is for joint ventures. Now, here first we saw there is a holding company which is also called as parent company, and there is minority interest. So, except the majority, the small portion which others are holding is called minority interest. Then first we learned how do we calculate goodwill or capital reserve. So goodwill is nothing but how much you have invested in the subsidiary. We compare that with net assets. We compare that with net assets or holding company share at the date of acquisition. If you are paid more, then it is goodwill. If you are paid less, then it is capital reserve. Then we saw how do we calculate minority interest. Minority interest at the time of acquisition, at the time of consolidation, we have done few problems. And consolidation is simple one-to-one addition, subject to few adjustments. Sanish, subject to few adjustments. What are those adjustments? We add both, but share capital we record only of holding company. Subsidiary company share capital gets knocked off with investment of holding, and some part goes to minority interest. Minority interest. Then we have learned as per AS 13, any amount you receive for the period when you are not the owner should be credited to PNL or should be reduced from investment. It should be reduced from cost. It should be reduced from cost. So then after that we did few problems on consolidation, and one unique adjustment we saw regarding stock upstream and downstream. What is upstream transaction? Subsidiary has sold goods to holding company. So we have to remove the profit journal entry. Holding PNL, minority interest to stock. Then downstream transaction. Holding company selling goods to subsidiary, journal entry. Company owings you have to subtract. Now today's class consolidated cash flow statement. Now 50% of class will tell, भैया cash flow statement पढ़ाया ही नहीं. Yeah, I know. I'll tell you. Cash flow is our next chapter, but this is not there in our syllabus. Consolidated cash flow statement, it's not there in our syllabus. We have only consolidated balance sheet, consolidated P&L, and consolidated notes. The consolidated cash flow, it's not part of our syllabus. So be free, be happy. Now, uniform accounting policies. Now, let's say, for example, I am a holding company and I am using weighted average method for valuing inventories. I have a subsidiary who is valuing FIFO method. Now, as per AS2, both are allowed. As per AS2 inventories, both are allowed. FIFO and weighted average both can be used. Now, both are doing right, but in standalone. Now, when I add both, is it okay if I have some stock based on weighted average and some stock based on FIFO? No. So what we have to do, we have to align both the books and streamline the books. Both the books should follow same policy. So you will change subsidiary books as per holding, or you will change holding books as per subsidiary. Always we have to mold ourselves as per our parents' choice. Don't expect them to bend as per you guys. So the subsidiaries company's balance sheet should be made online with holding company's balance sheet, everyone. Here we have a simple mock-up problem. I don't expect this in exam, but okay. Let's do it quickly. Subsidiary B provides the following balance sheet. Shareholders fund, share capital, reserves, all the common items and notes. Also consider the following information. B Limited is a subsidiary of A Limited. Now, A Limited, have they given any details? No. So, consolidated balance sheet is not possible here. Consolidated balance sheet is not possible because A Limited details they have not given. Both the companies follow calendar year as the accounting year. Here, very lucky, both the companies. I have seen consolidation where different companies following different accounting period. One from Jan to December, other from March to April to March, other from July to June. ये भी होता है. In India itself it happens. RBI, you see RBI annual report 1st July to 30th June. First I said wrong hai. Because I thought RBI, everyone in India we follow calendar, financial year. Financial year. Calendar year is generally British, they follow. Now, then I realized RBI is governed by RBI Act. And RBI Act says financial year is July to June. So like that, a lot of countries, they have from July to June also. Disha baad mein. So now, and consolidation, bhaiya, how many? When I was in Standard Chartered Bank, they were consolidating around 200 companies. 200 companies consolidation. एक में हालत खराब हो गई. Right? We just merge one company, and I have done a maximum of 12 companies at a time. दिमाग खराब हो गया. See, because we have a lot of apportionment which we have learnt in costing. There is one holding company who is apportioning expenses to subsidiary. So standalone it is correct, but in consolidation everything has to be removed. Subsidiary X gives services to subsidiary Y. So subsidiary X income, subsidiary Y expense, both has to be knocked off. So now we are seeing for holding and one subsidiary. वो 12 का कहना, trust me, मजा आ गया. That time I realized consolidation, what it is exactly. What we are doing now in the class, it's nothing. It's nothing. But because you are at the first stage, you are just learning consolidation, Chaman. You know how people sit in train and sleep. How? 1008 days to sleep in class. Okay, so here luckily they both are following calendar year. Trust me, if one is calendar, one is financial year, skip the problem. Skip the problem. वो दिमाग खराब करने वाला क्वेश्चन होगा. A Limited values inventory on weighted average basis, while B Limited uses FIFO. To bring B Limited values in line with those of A Limited, its inventory is required to be reduced by 12,000 at the end of 2020 and 34,000 at the end of 20x1. Everyone. So if you have to reduce the inventory, everyone, what will be the journal entry? P&L to stock. Reduce the inventory, those stocks should be credited. Debit you can do to P&L. B Limited deducts 1% from trade receivable as a general provision against doubtful debts. Now, is anything given about A Limited? Means A Limited is not creating provision. Now, these guys, they have already created provision. Everyone. So we need to add it back. So two adjustments still now. Stock value we have to decrease. And second, provision we have to add it back. Prepaid expense in B Limited include advertising expenditure carry forward 60,000 in 2000 and 30,000 in 20x1 being part of initial advertising expenditure of 90,000 which is being written off over 3 years. Similar amount of A Limited has been fully written off. So what A Limited has done, they have fully written off the amount. But what B Limited is doing, they are amortizing it over a period of 3 years. Now, totally, if you see, there are only 3 adjustments in the problem. Stock, provision, and prepaid expenses. Only 3 adjustments. For that, we have to do the entire problem. And I don't have a choice, we have to do. Restate the balance sheet. प्यार से उठाया इन्होंने, किससे सो जाते हैं. Restate the balance sheet. So prepare the same balance sheet but with different figures. After considering the above information for the purpose of consolidation, would restatement be necessary to make the accounting policy adopted by A Limited and B Limited uniform? Come on everyone, tell me. Yes or no? The answer is yes. Restatement is necessary. Now, one very good thing they have given in the problem, restate the balance sheet of 31st December 20x1. Here I will ignore the second column. 20x0, I'll ignore this. Which balance sheet we write opening balance? वो कौन बोला? NPO कर रहे हैं. So we'll not do. They have asked us to restate the 31st March 20x1. We will do only that. We'll do only that. They did not ask last year, so don't waste your time. So very simple, very mokke problem, but why? Excuse. Hmm. We'll do when we do the adjustments. That time we'll check if adjustment is actually required. Illustration 16. So now, can I write consolidated balance sheet? It should be restated balance sheet. Uh-huh. So restated balance sheet of S Limited. Restated balance sheet of S Limited as at B Limited. Okay, B Limited. As at 31st March 2008. Because both of them are following calendar. Equity and liability shareholders fund share capital. Note number 1. Will it change or will it be same? And no change in shareholders fund. So it will be same. This problem, I don't want you to write notes, except those 3 notes where we have changes, that alone. Otherwise, we have to copy the question. No use, no use. Here they have given 5 lakh. What we'll do, go down 5,000 equity shares of 10 each, fully paid of 5 lakhs. So not worth, not worth. So विधि बाद में लिख लेना. Reserves and surplus. Reserves and surplus. Reserves and surplus. This will undergo a drastic change. This will undergo because every item, the other leg is P&L. See, if you increase the provision, Nimita, एक पेंडुलम भी इतनी बार ऑसिलेट नहीं होगा जितनी बार आपने ऐसे कर दिया. So yes, everyone. Reserves and surplus provision. In case you want to increase the provision, journal entry. P&L to provision. Increase the provision, P&L to provision. But in this problem, are we required to increase or decrease? Decrease the provision. Decrease the provision. So provision to P&L. Provision to P&L. Everyone, is it clear? So the key adjustment itself in this problem is for reserves and surplus. Reserves and surplus. So now let's see what they have given in the notes. Only general reserve. 7,14,000. Now the first adjustment stock. The first adjustment stock. So stock value, you are increasing or decreasing? You are decreasing the stock value. So what will happen to profits? Will decrease. Will decrease. Less reduction in stock. Less reduction in stock. So how much we have to reduce? 12,000 for 2020 and 34,000. So 34,000 every one. Then provision, what we have to do? Huh? Decrease. So journal entry is provision to P&L. P&L credit, no. decrease in provision. So provision, if it reduces, your profits will increase. Now we have to calculate. Now trade receivable in this problem 891. This is after provision or before provision? After provision, it is 891. So can I say this is 99% only? Because if 100 rupees is my debtors, 1% provision and 99% figure is there in the balance sheet. What will be that one? 9 lakh is total trade receivable. 1% provision. 9,000. So two adjustments over. One is stock, the other one is
स्टॉक फर्स्ट ईयर पे डिक्रीज हुआ तो ओपनिंग स्टॉक भी डिक्रीज हुआ
opening stock balance sheet में आता है.
पीएनएल में तो आता नहीं ट्रेडिंग में
Changes in inventory. हाँ.
ओपनिंग भी रिड्यूस हुआ है क्लोजिंग भी रिड्यूस हुआ है
हाँ, I'll come. मैं खत्म नहीं किया अभी भी problem. So now moving forward, prepaid expenses in B Limited include advertisement expenditure carry forward of 60,000 in 20x0 and 30,000 in 20x1. Can they carry forward? Can they carry forward? No, because holding company is not carrying forward. Everyone? Yes. So what will be the journal entry for this? Journal entry for D transaction. Come on, everyone. P&L to prepaid expenses. P&L to prepaid expense. Prepaid expense is an asset. You have to reduce because holding company is not carrying forward. You cannot also carry forward. You cannot carry forward. So P&L to prepaid expense. Your profits are decreasing. Less reduction in prepaid expense. Amount is 30,000. 30,000. Yes, come on, everyone. 6,59,000. 6,59,000. Now, the next question, bhaiya, opening stock, no adjustment you did, bhaiya. Opening stock, no adjustment you did. Current assets में आएगा. Profit कम होगा.
उसमें आने चाहिए उसमें अपन पिछले साल का नहीं प्रिपेयर कर रहे थे इसमें से डिडक्ट करना पड़ेगा.
Okay. 12,000 you'll add in the profit. Okay. Anyone else? So here three people said, bhaiya, this opening stock adjustment alone is disturbing. All the other things are fine. Why? Perfect. Everyone?
Yes.
So if you adjust in your opening stock changes in inventory, everyone, in your balance sheet again it will get adjusted. So that's why I said don't break your head in previous year figures. Absolutely not required. Because if you change last year figure, this year again you have to reverse it, no. So at the end there is no impact. Minority interest they have given. You can ignore. Then current liabilities. Any changes in any of the three? Everyone, all the three, cut, copy, paste. So current liability, short-term borrowings. Huh? Short-term borrowings, note number 3, 1,70,000. Then trade payables and short-term provision. 494 and 430. If I total 22 lakh 53,000. Now asset side, I'll move a little right. Please, you guys don't do. So assets. Under assets, property, plant and equipment. Is there any change? No, everyone, it's the same. 2,24,000. Then we don't have intangible asset, but non-current investment. Any change? Any change?
No.
But non-current investment, here we don't have a note number, so we'll also not put 4 lakhs. Then current assets. Current assets. Under current assets, we have inventory, trade receivable, cash, and other current assets. Inventory, trade receivable, cash, other current assets. And only for other current assets, we have a note. So inventories, is there any change? Everyone. So inventory. How much is the figure? 7,42,000. 742. Now what should I do? What should I do in inventories? Less. Less reduction in value. How much? So what is the revised value? 7,08,000. 7,08,000. Just a minute. Trade payables also note will not come. Now trade receivable, is there any change? Yes. Trade receivable as per books it was 891. And add reduction in provision 9,000. So revised value 9 lakhs. Cash and cash equivalents, any change? Cash, any change? No. So 3,000. And finally, prepaid expense, any change? Yes. So four notes. Prepaid expense as per books 48,000. 48,000 less amortized deduction, anything. 30,000 was that 30,000 that we are writing off. So revised value 18,000. So total 2253. Everyone. Now again I'll tell you one simple logic, guys. See, while consolidation, what did we do? While consolidation, here we have added 9,000. Here we have added 9,000. And we have also added 9,000 in reserves and surplus. Then stock we have reduced by, and we have also reduced in reserves and surplus 34,000 here, and prepaid expense we have subtracted from prepaid expenses, and here also we have subtracted from prepaid expenses. Everyone, So when assets and liabilities, you are doing the same thing, automatically it will tally. Everyone, only these three adjustments. And I don't want you to write all the notes. Just write these 4 notes. Note number 2, inventory is. Note number 6, pay receivable is 7 and prepaid expense is 8. Come on, everyone, write quickly. And with this, all the illustration problems are over. We'll start practical problems. So now let's start with the practical problem and MCQ questions. Okay, so yes, open to all. Minority interest should be separately from liabilities and equity of parent shareholders. Yes. So now one doubt, why are we showing minority interest on the liability side of balance sheet? Because we are taking the entire balance sheet. Subsidiaries balance sheet, holding companies taking the entire balance sheet, but only 70-80% is there. The remaining part is minority. That is why we are showing it as liabilities. Yes, is entitled to. They will get both capital and revenue profit. Capital and revenue we segregate only for holding company share. Third. So liability of subsidiary company we'll knock off, but with current assets and reserves and surplus of both companies. Nay, we don't adjust mutual indebtedness. Yes, minority interest. So let it be provision for tax for holding or subsidiary. Both will come under current liability. So today, along with those amalgamation problems, I'm going to add few more problems as homework. Yes, and definitely I'll move your test. Sixth is homework. Seventh. All these are similar problem to all the problems we have done. Seventh, sixth to seventh, eighth. This I'll do. 10th month I'll do. Because here this is a 10th month you can mark as benchmark problem. This problem has dividend bonus both. And this is the complicated part of the entire chapter. So 10th problem you can mark as benchmark problem. Practical problem 10 which we'll do now. So these two I will take care. 10th and 11th I'll do. The remaining problems will be your homework. So now let's start. Let's start practical problem number 10. On 31st March, the balance sheet of H Limited and its subsidiary stood as follows. Share capital, reserve, trade payable, short-term provisions, other current liability, dividend payable, non-current assets, current assets, all are usual items only. And notes. The following information is also available. H Limited purchased 180 lakh shares in S Limited on 31st March when the balance in general reserve and P&L stood at 3,000 lakhs and 1,200 lakhs respectively. On 1st April, S Limited declared a dividend at 20% for the year ended this. H Limited credited the dividend received by it to its P&L. A holding company, they did a blunder. Dividend they have received, they should have reduced the cost, but what did they do? Credited to P&L. On 1st January, S Limited issued 3 fully paid up bonus shares For every 5 shares, what is the ratio? Out of balance of its general reserve as on 31st March. On 31st March, all the bills payable in S Limited balance sheet were accepted in favor of H Limited. But on that date, H Limited held only 45 lakh of this acceptance in hand. The rest have been endorsed in favor of its trade payables. CA Foundation Bill of Exchange. So what has happened? They have received the bill. They have received the bill, but few bills they have endorsed. Few bills they have passed on to their payables. On 31st March, S Limited inventory included goods which it had purchased from H Limited, which it made a profit of 25% on cost. Upstream, downstream. Downstream. H Limited has sold to S Limited. Holding sold to subsidiary. Then this is downstream. Prepare consolidated balance sheet. Beautiful problem. Very good chances of this problem like this being tested for 14 marks. Go through the adjustments quickly. Can I begin, everyone? So, consolidated balance sheet of H Limited and its subsidiary S Limited. So, we'll start the balance sheet. We'll have the CAM approach, what we have done so far. So, yes, how do I start? Equity and liabilities. Under that, shareholders fund. Under that, share capital. Note number 1. So, notes to accounts. Note number 1, share capital. Note number 1, share capital. Now, what should I write amount? Only holding company. So it should be 12,000 and the numbers are in lakhs. So here I should write amount in lakhs. Amount in lakhs, 12,000. Now let's see the note. Note number 1. So equity shares of 10 each. How much? Sorry. Equity shares of 10 each. How much? No, we'll write the numbers in lakhs. 12,000. Then After this, next item,
Reserves
reserves and surplus. Here, this part we have to be very careful, everyone. Can I begin? So, note number 2, reserves and surplus. And before we start, this note, working note 1, cost of control. We compare what and what? So, cost of investment. It's not given here. Shares in S Limited, it is 3,000. Now, holding company share at the date of acquisition. What was the share capital? 4,800. This is before bonus, after bonus. After or before? So don't forget, guys, every time before you start the problem, you should know the percentage. Before you start the problem, you should know the percentage. So this is 31st March 20x1. It is 4,800. Now, bonus and all, when did we give? On 1st April 20x0. Dividend. And 1st January 20x1. Balance sheet is 31st March. So this is before bonus, after bonus. This is after bonus. And when did we acquire? 31st March 20x0. 31st March 20x0. And how many shares? 180 lakh shares. 180 lakh shares. Now, I think here this part is going to be a little complicated. So I'm doing one more working note. Share of holding, it is H Limited, no? Share of H Limited in S Limited. S Limited shares. S Limited shares. So S Limited, it is 4,800 everyone. And 10 rupees. 10 rupees. So can I say 480 lakh shares? S Limited shares, 480 lakh shares, 480 lakh shares. H Limited, how many shares did they take? 180 lakhs. So 37.5, bhaiya, it is not even subsidiary, bhaiya. So this they acquired on 31st March 20x0. Can I say beginning of the year?
Yes.
They have acquired in the beginning of the year. So this 180 share is before bonus, after bonus? Before bonus. And bonus was declared in the ratio 3:5. So how many share H Limited purchased 180? 3:5, 3:5. 108 lakhs total. 288. So percentage holding.
60%.
288 by 480. 288 by 480, it is 60%. 60% everyone. Vani, pesto pasta. So 60%. 60% everyone. So percentage holding company is holding 60%. 60% in subsidiary. 60% in subsidiary. Now, so see guys, where we were, we were doing balance sheet. Note number 2 was reserves and surplus. For reserves and surplus, we went to cost of control. But cost of control, we don't know percentage. So we calculated percentage first. Everyone. So share capital, now it is
4,000.
4,800. 4,800. So 4,800 into 60%. 2,000.
Acquisition share capital अलग होगा.
after bonus.
Hmm.
Because the bonus and
When did I acquire?
Opening money.
31st March 20. And bonus was also paid for the same period. Bonus was also paid for the same period. So 4,800 into 60%, 2,880. Now we have pre-acquisition profits. We have to do that split up. Everyone, shall I begin?
yes.
So S Limited reserves. Balance sheet figure, S Limited reserves. Oh, reserve, general reserve, 1380. Now, the day they have acquired, general reserve stood at 3,000 lakhs. So, pre and post. So, pre was 3,000. Now, post, can we say it is a loss? Post, can we say it is a loss? The answer is no. They have issued bonus, no. And this bonus has happened before I acquired. Everyone. So this will be subtracted. This will be subtracted from pre-acquisition. Now, bonus. This 4,800 shares they have. Everyone. So this is after bonus. So and the ratio was 3:5. Everyone. For every 5 shares, you will get 3. For every 5 shares, you will get 3. So can I say total 8? 5 plus 3, 8. So before bonus, how many shares are there? 5. Cross multiply.
3,000.
3,000. So can I say bonus is 1,800? Everyone. Can I say bonus is? Sweetie. So minus bonus, 1,800. Should I subtract anything else? Huh? Dividend? Dividend, should I subtract from here? Or should I subtract from profit? Profit. So here we have pre-acquisition reserve is 1,200. Post-acquisition reserve 180. In this H Limited and minority interest. So 720, 480,
72.
108. And can I continue? This is S Limited reserves. S Limited PNL. S Limited PNL. What was the balance in S Limited PNL?
620.
1620. 1620. In that, how much is pre and how much is post? When we acquired, pre-acquisition was 1,200 less dividend. How much dividend? 20% on 3,000 or 4,800? 3,000 was only that. 1,800 we have given bonus. So dividend I'll pay only on 3,000. 3,000 20%. 600. Any other adjustment? और एक बार huh? So remaining 600 post acquisition 1,020.
20.
Where is 600 cost the minus?
अभी तक किए ही नहीं हमने How much H limited? How much minority? 360 and 240. Holding and minority. 408. Everyone, can I continue? So now, pre-acquisition reserve, how much should I write here?
720.
720. Pre-acquisition profit. Any revaluation reserve? Total 3960. Total 3960. Goodwill or capital reserve? Capital reserve. How much? 960. Yeah.
What's the minus?
Ah, very good. So, Bhaiya, we have received dividend also. We should have subtracted from cost of control. But what we did, credited to P&L, credited to P&L. So less dividend. How much dividend did we receive?
360.
How did you get 360? 600 into 60%, 360. So my net cost 2640. I paid 2640, but I got 3960. Capital reserve 1320. Capital reserve, capital reserve. So general reserve, capital reserve 1320, 1320. Everyone till here clear? Everyone. Then after capital reserve, the next item is general reserve. General reserve. How much for holding? 2784. How much for subsidiary? Subsidiary, we have to see here. We have to see here. 108. Then P&L. Again H limited, S limited, H limited, and subsidiary
612.
3327 7539. Everyone, everyone. Very good. What holding company they have done? They have credited dividend to P&L. So that is wrong credit to P&L. Now we have to reduce that. Now we have to reduce that. So less pre-acquisition dividend. Less pre-acquisition dividend 360. So holding plus subsidiary minus the reserve which they have wrongly credited. Reserve which they have wrongly credited. Now the total 7179. 7179. Everyone. 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 Sure, bhaiya, we thought it got over. ए खुश इधर इधर दिव्यांश को देख कैसे हो Only if you are alert for the chapter, you will, if you have read the question properly, you will be in a position to answer. No. One very easy mukhya item we missed. What profit? Very good. Unrealized profit. Unrealized profit. Everyone, note number, sorry, point number E. S limited inventory included. So it is upstream, downstream. The S limited inventory included goods which it had purchased from H limited. P&L to stock and profit 1/4 on cost. 1/5 on sale. So 20 lakhs less unrealized profit. So holding plus subsidiary minus pre-acquisition dividend minus unrealized profit 2947. 7159. So this is final reserves and surplus. 7159. Everyone, can I continue? After reserves and surplus, next item. Minority interest, note number 3. Minority interest, share capital. Come on, everyone. 4,800. 19. Then general reserve. So general reserve, we have two amounts here. General reserve, we have 480 and 72. 552. And P&L also, we have two amounts. 240 plus 408. Anything else? 3120. 3120. Everyone, this is minority interest. 3120. Next, after minority interest. Not that. None of the non-current liabilities. Current liabilities, note number 4. So under that, okay, trade payables. Trade payables, note number 4. Trade payables, note number 4. So creditors, bills payable, any adjustment required? Intercompany owings. So creditors, H limited and S limited, no change here. Creditors, 1461 854. And then bills payable. Bills payable. H limited, S limited, intercompany owings. So bills payable, H limited, 372, 160, and intercompany owings. How much should I subtract? How much should I subtract? Think and tell. Think and tell. H limited had only 45 lakh in their books. Everyone.
Yes.
So we will subtract 45 lakhs. 45 lakhs. 2802. 2802. After trade payables, next item. Short-term provisions. Note number 5. Short-term provisions. Again, H limited and S limited. Here, any adjustment required? It is provision for tax. Provision 855, 394. 1249. Short-term provisions over. Then other current liabilities, dividend payable, 1200. Will it come? Other current liability, 1200. Will it come, everyone? Yes, no, yes, no. Will it not be adjusted? If it is there for S limited, then you will knock it off. Because S limited payable and H limited receivable will get knocked off. But this is holding company payable. Dividend payable 1200. So I think liability side over. The balance sheet total 27,530. Any doubts for anyone? Any doubts? Now moving to the asset side. Non-current assets. Non-current assets. Property, plant and equipment. Note number 7. खत्म ही नहीं हो रहा भैया balance sheet. Note number 7, PPE. So all these three, any adjustment required? Everyone. So what we will do, we will write H limited and S limited, or alternatively, land and building only H limited. 2718. Plant and machinery 4905 plus 4900 9805. Furniture and fittings 1845 586 2431. 5 total 14954. What you are doing, bhaiya? PPE over. Then investments will come. No. Why? Already adjusted with share capital, cost of control. Inventories will come. Obviously. But before that, current assets. Under current asset, inventories. Note number 8. Inventories. Again, directly they have given H and S. Very good. 3949. S limited 1956 less unrealized profit. Less unrealized profit. 5885. Inventories over. Then trade receivables. Note number 9. Here, जगह ही बच नहीं हो रही. See, 33 columns I have written 3 times. I have written up to 33rd row and three columns I made. So note number 9. Trade receivables and debtors and bills receivable. Debtors, it is 2600 plus 1363. Anand? सोते सोते भी आप कैसे हंस लेते हो? 3963 bills receivable. 360 plus 199 minus 45 intercompany owings. 514. 4477. We have only 9 notes till now. Oh, two more confirmed. Cash and cash equivalents. Cash and cash equivalent note number 10. I can understand your frustration. 1490 and 1694. Short term loans and advances. Note number 11. Last note. Pakka. Sundry advances. Sundry it is 520. 27530. Everyone. The entire I took around 40 half an hour just to do this one problem. I don't know how long will you guys write, but let me tell you now what was new in this problem. Bonus and dividend. On share capital bola. Percentage calculation was tricky. Everyone. Then you can highlight in your notebook itself because you will not have time to do the entire problem again and again. So the key areas you can highlight. Then bonus we are subtracting from reserve and dividend we are subtracting from P&L. And both we have subtracted from pre. Why? We have acquired on 31st March 20 beginning of the year. And dividend and bonus both were paid before that. That is why we have subtracted from pre and not from post. Second unique adjustment, everyone. Then all this are same. P&L. There are a few adjustments in P&L. You have to subtract. Pre-acquisition dividend. Why? Because these guys, they have credited the dividend to P&L. Is it correct? It should be reduced from the cost. Everyone, is it clear? Now, before you write, just see how ICI is expecting the answer. So, 10th problem, balance sheet will be ditto, cut, copy, paste. See notes. 60% I did not one working note for that. Then they prepare general reserve account. They prepared P&L account. And the beauty is general reserve balance they transfer to P&L. Everyone, general reserve balance they transfer to P&L. And here, please, Harbar nahi, not this problem. Divyansh, please. So 180. Bhaiya, how it will strike us in the exam? That is why I am telling time and again, don't follow the key answer. If you are stuck at any point of time, you refer key answer, udhar hi game khatam, you will never learn. Mark my words now. क्योंकि अपना मेथड जो है टेक्स्ट बुक के मेथड से मैच नहीं होता, but the same method I am doing from the beginning. Follow that. They have transferred. Then revenue profit distribution they have shown separately, capital profit separately, and then capital reserve. 5. Then minority interest. Never I do a separate working note. I always add it in the notes to accounts. Then inventory. This also I did not do. And bonus. 8 working notes. And how much do we have? 2. Everyone, we just have 2 working notes. We just have 2 working notes. Here they have 8 and here notes to accounts 10. We have
11.
1 extra कैसे?
वही अपन लो.
Okay, okay. Everyone, now I'll send this. I expect you to write it quickly and then you can go for break. Today's class you can inform at home definitely 6:30. Nowhere possible. I'm not leaving you guys till I complete associates. Yes, I have sent. No discussion absolutely for any reason. You can complete and then go for your break. We have one more problem in subsidiary and I also want to complete AS23 today. So the sooner you write, the sooner I leave you.